Topic explains that financial crime and fraud risk management are critical components of operational risk management within financial institutions. Financial crimes include fraud, corruption, cybercrime, insider trading, bribery, identity theft, embezzlement, and other illegal activities intended to obtain financial benefit unlawfully. Fraud risk arises when individuals or organizations exploit weaknesses in internal controls, systems, or governance frameworks for personal gain. Financial institutions are particularly vulnerable because they manage large transaction volumes, customer assets, and sensitive financial information. Effective fraud risk management therefore requires comprehensive governance, strong internal controls, regulatory compliance, and continuous monitoring to detect and prevent criminal activities before they generate significant financial or reputational damage. Fraud can originate from both internal and external sources. Internal fraud involves employees, managers, or insiders abusing their access privileges to manipulate transactions, misappropriate assets, or conceal unauthorized activities. Examples include unauthorized trading, falsified reporting, bribery, and embezzlement. External fraud involves criminals outside the organization using phishing schemes, identity theft, payment fraud, cyber attacks, or counterfeit documentation to exploit institutional vulnerabilities. Technological innovation and digital banking have increased fraud exposure by creating new channels for cyber-enabled financial crimes. Institutions must therefore maintain robust authentication systems, transaction monitoring tools, cybersecurity controls, and segregation of duties to reduce opportunities for fraudulent activities across operational processes. Risk identification and assessment are essential elements of financial crime and fraud risk management. Institutions conduct fraud risk assessments to identify vulnerable business areas, evaluate control weaknesses, and analyze potential fraud scenarios. Historical loss data, incident reporting systems, whistleblower programs, audits, and employee feedback contribute to fraud detection efforts. Advanced analytics, artificial intelligence, and machine learning increasingly support fraud monitoring by identifying unusual transaction patterns and suspicious customer behavior. However, fraud risks continuously evolve as criminals adapt methods to changing technologies and regulatory environments. Institutions must therefore maintain dynamic risk assessment frameworks capable of addressing emerging threats, complex transaction structures, and rapidly developing digital financial ecosystems. Strong governance and organizational culture play important roles in preventing financial crime and fraud. Boards of directors and senior management establish ethical standards, risk appetite, and compliance expectations that shape employee behavior throughout the organization. Institutions implement codes of conduct, employee training programs, whistleblower protections, and disciplinary procedures to reinforce accountability and ethical decision-making. Independent audit and compliance functions provide oversight and evaluate the effectiveness of fraud prevention controls. Regulatory authorities also require financial institutions to maintain anti-fraud programs, suspicious activity reporting mechanisms, and customer due diligence frameworks. A strong ethical culture reduces misconduct risk and supports institutional integrity, transparency, and long-term operational resilience. Effective financial crime and fraud risk management strengthens customer trust, regulatory compliance, and financial system stability. Institutions that fail to manage fraud risks adequately may experience substantial financial losses, legal penalties, operational disruptions, and severe reputational damage. Modern financial crime management therefore requires integration of governance, technology, internal controls, cybersecurity, and employee awareness into comprehensive risk management frameworks. Collaboration between financial institutions, regulators, law enforcement agencies, and international organizations also improves detection and prevention capabilities. As digital finance, cross-border transactions, and cyber threats continue to expand, institutions must continuously adapt fraud risk management practices to maintain operational resilience and protect the integrity of global financial systems.